to Archie in a minute. This is a great webinar for me because Archie's going to do all of the heavy lifting. But I just would want to say any questions, really, happy to receive questions. Just pop them in the chat, and we can either ask them during the presentation or certainly at the end, and put them to Archie. You may have seen today I posted earlier just promoting this webinar because I find it fascinating that the way that we spend money has changed so much. There's so many different ways of spending money, but actually the way that we are paid, traditional methods have remained in place for so long. In fact, I don't know many organisations that have changed the way that they pay their employees. So I think this is something that we all should take great interest in, and I certainly think it's a way of not only attracting candidates in this labour type market, but also retaining candidates by giving them a flexibility around how they're paid. We talk endlessly right now around flexibility. So actually the next level of that surely is around how people are paid. So without further ado, I'll stop chundering on, and I will pass over to Archie Heaton. Thanks, Archie.
Thanks, Mel. Thank you so much for joining everyone today. The title of this webinar is On-Demand Pay for Dummies, and it's sort of a variation on something I've presented a few times now, slightly tweaked for you guys and staffing in particular. But what I really want to try and do as someone who works in this industry and sort of thinks about it and breathes it every day is to attempt to summarize all of the knowledge I've gained working in this space and sort of in 30 minutes or less try and make it really digestible, a bit of a one-stop shop for everything you need to know. If you're A, have heard of this and you're looking into it, and then B, also, if you've never heard of this before and you're sort of new to the concept. And so that's the sort of plan today. I think the first thing as well to note is that there's a few names for what we call on-demand pay. So you might have heard, obviously, on-demand pay itself. You might have heard the phrase earned wage access, flexible pay, instant pay, or early wage access. All of these things are exactly the same thing. They are just synonyms for exactly the same technology. So if you've heard any of them before, it's what we call on-demand pay, and it's exactly the same thing. But before I dive into on-demand pay and what it is, I always think it's worth taking a little step back and understanding essentially why on-demand pay exists. And that's because if you look at how most people's financial lives play out today, it's really interesting because broadly, regardless of how much you earn or what job you do, the routine of most people's financial lives today is really, really similar. So most of us work and earn money most days. So typically that's Monday to Friday, but it doesn't have to be. But most of us work and earn money on the majority of days. We then unfortunately spend money pretty much every day of the month. And yet, bizarrely, we only get paid one day of the month on payday in arrears for the whole month. We'll come on to later for those who pay weekly, but for now, talking about those who pay monthly. And so what you see is that everyone's bank statement is this stream of outgoings followed by one big deposit when they're paid their wage once a month. So, for example, today, I get paid on the 25th and today is the 6th. So obviously I've had over 10 days now since I was last paid. And if I earn, for example, £100 a day, that means I've essentially earned over £1,000. And yet I won't be paid that for another 19 days. So how does that make sense? And essentially, the more you interrogate it and think about it, it doesn't really. Like so many things, it's just the way we've done things. But it's actually, interestingly, got worse since about early 2000. So it hasn't always been this way. So year after year, less British workers are paid weekly and more are paid monthly. And now nearly 90% of all British workers are paid monthly or 4 weekly. And as you can see in this chart, essentially, that decline has been much more radical for those who are in the lowest paid sections of the workforce as well. But essentially 2000 was around the turning point where more and more businesses decided to pay monthly over weekly. And the benefits are sort of obvious for the business in terms of lowering payroll costs and administration costs. But But bizarrely, what that means is it's one of the few areas where things have got slower. So, for example, my grandparents and even my parents, when they started working, were more likely than not to be paid weekly. And now, as I said, 90% are paid monthly. And so, as everything else has got quicker and more on demand, pay has actually gotten slower. So, 2 generations ago, most people paid weekly. Now, the vast majority of UK workers paid monthly. So, it's actually got 4 times slower over, for example, my parents' generation's lifetime, which the more you think about this, the more bizarre it is. So over the same sort of period, everything else has got faster. So the Ford Model T compared to the Tesla Model T, 6 times faster. Obviously, communication, we've gone from post to sort of WhatsApp. You've gone from sort of weeks to seconds. And obviously TV and things, we've gone from an episode being on TV once or twice a year to watching it on demand anytime you want. And I really, really do think that soon, 5-10 years from now maximum, we will look back on monthly pay in the same way we look back on the concept of waiting a whole week for the next episode of our favorite TV show, or sending a letter and waiting weeks for a reply. This really is outdated technology that's time to change. So it's all right for me talking about this being outdated technology and everything else has moved on, but why is it actually a problem? What actually is wrong with paying monthly? Firstly, it's a problem is it's a really, really rigid system. And while we think a lot about business cash flow, we need to pay a lot more attention to employees' personal cash flow. Sadly, most people in the UK don't have adequate savings, and 2 out of 3 people couldn't pay an unexpected bill of just £250. So that means when unexpected outgoings crop up, broken cars, unexpected trip to the vets, unexpectedly high rise in energy bill, many people are forced to turn to credit. And many of your staff, sadly, will use this without admitting to. And almost all the employers I've spoke to when we've conducted surveys, the use of this is far, far higher than they suspected. And even just statistically, if you look at the percentage of the population and map it to your workforce, people are often very, very surprised at how much this is used in their workforce. And so every year, UK workers repay 2 billion in payday loans, nearly 2.5 billion in overdraft fees every single year. And essentially, all of this debt is a very risky and a very pricey solution to personal cash flow issues. One of the saddest things as well is that payday loan companies actually ramp up and spend almost all of their advertising spend in the last week or the last couple of days before payday, because that's when typically people are starting to run out of money. And the minimum length of time you can borrow on a payday loan is 3 months. So sadly, a lot of people, they need 2 days worth of money to get them to payday. They end up borrowing on a payday loan and they have to borrow that for 3 months just to cover 2-day cash flow gap. And so we thought there's got to be a better way. 2, our research shows that many people struggle to budget over 4 weeks, especially if they used to get paid weekly in an old job or if they do a different number of hours each month. All of the data shows overwhelmingly that giving people more control over wages they've already worked hard to earn improves their financial well-being, especially now that direct debit costs come out all across the month. We don't live in a world anymore where everything comes out at the end of the month like our pay, as much as we used to a generation ago. This then has a big impact on people at work. So the average British worker spends 13 hours a month worrying about their personal finances at work, especially at the moment. These figures are expected to rise, and this distracts them at work. And finally, poor financial well-being leads to higher turnover, and the big gap between doing the work and getting paid for that work disincentivizes shift uptake. And I suppose that's really what we're talking about today, is this delay between work and pay that's bad and suboptimal for everyone. And obviously what we want to talk about today is on-demand pay. And what on-demand pay does is remove this gap, thus ending short-term debt use, ensuring workers can better meet unexpected costs. And this has enormous, enormous knock-on benefits for their employer as well. So what is on-demand pay? On-demand pay essentially gives employees access to their earned wages before payday. What's really important to stress at this point is on-demand pay is not an advance on money that hasn't been earned. It's simply access to money that has been earned before the traditional payday. This brings income totally in line with spending, and this dramatically improves workers' financial well-being because, again, this is not debt. People do not have interest. There is no debt. There is no effect on credit score. This is simply facilitating access to people's own hard-earned money. So it's a debt-free alternative. And then that has really dramatic and significant improvements for the business performance, which we'll come on to. In sort of practical terms, how does it work? It's really, really simple. So all workers need to do is open up an app on their phone. Here they can see the amount of money they can access, which is usually a percentage of their earned wages so far that month. They then simply select the amount, so typically between £50 and £200 that they need, and they just click withdraw. The money will then be in their bank account within 2 minutes max. And the cost of this, and this is the bit we're really, really proud of, the cost of this is just a small flat fee of £2 that operates like an ATM charge. There's absolutely no debt for the worker. There's absolutely no interest. It's just a small flat fee that doesn't matter how long before payday, how much they need to withdraw. It's always £2. And this works out, if you compare it to taking £200 through a payday loan, 99% cheaper. The average interest in a payday loan is £200. And it can obviously be far, far, far higher than that. And unlike these options, again, this is available to everyone. So the traditional financial market will charge those with worse financial health more money, and will sometimes refuse to deal with people who have particularly bad financial health. Because we are not lending people money, we are simply facilitating them access to their own money. We give this for the same price and on the same terms to absolutely every employee. We do not discriminate, and we are one of the few financial products available today that absolutely everyone can use. So that's all great, but why should you care about this as employers? Well, firstly, we think there's a moral imperative. We honestly think this is the right thing to do. We know this helps people get out of predatory short-term debt, which, as I've said, is almost certainly higher than you think in the workforce, sadly. And independent studies have shown that this dramatically increases the confidence that people feel. 88% of users feel more confident with their finances. And also, this is not only morally right, but it's a really good differentiator, and it can help demonstrate to your clients, your end clients, good CSR, and actually increasingly the sort of things that people are looking into when choosing suppliers and who's going to provide their staffing needs. This is a really good way to A, differentiate, and B, demonstrate that you really care. And as we all know, they're increasingly the things people are looking for when they're choosing companies to work with and to partner with. Secondly, the wellbeing boost we've talked about has sort of one of the first tangible business impacts, which is this 13% decrease in absenteeism. So in the US, this is far more advanced than it is in the UK. 20% of all workers in the US are paid through on-demand pay and have access to on-demand pay. In a market such as staffing and outsourcing, you would expect that to be 80-90% of companies. It's become very much in a lot of industries in the US a must-have, not a nice-to-have now. And the academic studies that have been conducted over there show a 13% decrease in absenteeism when workers use on-demand pay versus the companies where they don't offer it. And if you take a step back, that's amazing. By making the same amount of money, you're more useful, you're really helping the workers, and you're reducing absenteeism for the business, all by paying smarter, not necessarily by paying more. So it's approaching pay from a different angle to usual, and you can keep your wage bill the same and actually see the sort of things you would usually have to increase your hourly rate to see. The third big advantage is the revolution that a lot of companies have seen in recruitment and retention. So Capita are one of our biggest clients. They're, as you probably know, the UK's biggest employers, nearly 40,000 staff in the UK. And they've been using our product for 2 years now, and they ran the numbers, and what they saw is that staff who use Level turned over at almost half the rate when compared to staff who didn't use Level in their call centres. And the truth is that people are just much less likely to leave when they get paid on demand. And so that's results from Capita, and we've got some more materials we can share about our work with Capita and the data and the case studies. But we were expecting something. We weren't truthfully expecting a reduction that big, and it's something that now we're working really closely with Capita, because they now have it as a key metric to try and actually get more people at Capita using Level. Replacing those that do leave from a recruitment standpoint, as Mel mentioned, gets a lot easier as well. So surveys reliably show that 9 out of 10 workers want on-demand pay. And actually, interestingly, there was an article in The Guardian recently that said that more than half of UK workers would rather on-demand pay than an extra day or two's paid holiday. So this is without doubt the number one employee benefit these days, and the time it takes to hire sort of shoots down when you start to include this on job specs and offer it. The other thing to mention is, unlike other employee benefits, the usage of this is often very high. So often across a year, 60-70% of your staff might use this at some point. As we all know, often when you offer employee benefits, you can put a lot of effort and sometimes cost involved, and maybe some benefits would consider it as excessive. 4% of the company used it. This is definitely not like that. This is something the majority of your staff will be interested in if we look at the companies that are already using it. Finally, we've also seen on-demand pay just supercharge shift and overtime filling. And essentially, by making the reward for work more immediate, people are much, much more interested in taking on overtime and shifts. Working extra hours today for a faraway payday often isn't that appealing for people. But when you can mentally think, right, I need to spend the money on this, and so I'll do that extra shift and I can get that money this weekend. What you see is unfilled shifts become a thing of the past. So this data is pulled from one of our earliest clients, Mentor Education, who are London's #1 tutoring agency. And what they actually do is, over the summer holidays and other holidays, they take teachers who are off on holiday, and they get them to tutor. And what was the bottleneck for their business was not kids who wanted tutoring, but actually they were struggling to find enough teachers, and that was to tutor the kids, and that was what was bottlenecking growth of their business. Since introducing Level, what they've seen is that 62% more shifts have been filled. And this is obviously especially powerful for teachers who tutor for a second job and are very money motivated in doing that. Again, a reminder, 62% more shifts filled on the exact same wage bill. They have not increased their hourly rate. They've simply decreased the time between work and the reward for work. But the magic in this is really in how easy it is to implement. And so new technology means that you and your staff can enjoy all of what we've discussed without requiring you to change payroll systems or software. You simply, as an employer, run payroll the same day you would usually run payroll through the same systems you would usually run payroll. It doesn't affect your cash flow, so your provider would deal with the liquidity between when someone accessed their wages and payday, when you would usually pay. There's zero impact on your cash flow as a business. And obviously, as we've discussed, all of these benefits are changing sort of how you pay rather than what you pay, and so your wage bill stays the same. Typically, this takes as well sort of 14 days to implement. It's not. I think sometimes people worry this is sort of a big payroll or a big technological implementation, which we know can take months and months. This is not like that at all. This is quite a basic layer that overlays on top of your current systems. So yeah, no impact on payroll, no impact on cash flow, no impact on wage bill. It's probably also worth mentioning, this is sort of a slide I've recently popped into the presentation, that at the moment the problems that on-demand pay was sort of invented to solve are worse than ever at the moment. So it's worse for you guys at the moment as employers because we're in this sort of bizarre situation where the economy isn't in great shape, but the labour market is still super hot. And so we are speaking to a lot of people at the moment who are really struggling with higher staff turnover and really struggling to recruit the right number of people. So anything that can help you attract and retain talent in this sort of still very hot labour market is obviously really interesting to a lot of people. And secondly, as other employers begin to offer this, and we'll come on to who offers it currently at the moment, but just today I had a quick look on Indeed.com before doing this, and 15,000 jobs now that are currently live, job listings that are currently live, offer this as a benefit. And so I think increasingly, if you're competing for that talent and a lot of the other places are offering it, then it really is interesting to look into, especially in the staffing sort of place where maybe you're competing with the gig economy as well. Most of the major gig providers, from Uber to Deliveroo and everyone, they also offer a version of this that can be accessed through the app as well. And so, I was chatting to a bakery recently that they actually pay much better than Uber, but they found that a lot of their employees were refusing to take on overtime because they would rather do their day shift in the bakery, work overtime on Uber, because Uber paid better, but because they could cash out that Uber at the end of the shift money. Whereas with the bakery, they'd have to wait until payday, and the immediacy was really attracting them to do overtime with a second employer, a gig employer, which is so easy, downloading an app, versus with their own employer. And that was really affecting the bakery. And then also there's the cost of living crisis. And obviously we've seen with energy bills and mortgages. And I think that makes this more critically important sort of financial health tool to be offering. And it's important to know that only an employer can offer this. Without us working with the employer, you know your staff cannot access this somewhere else. You have to offer us this, or your staff do not get access to it. And mental health and physical health are super important, but there's lots of organizations that can provide therapy or a gym membership for your employees, for example. But employers are in a unique position to support their employees' financial health. And often it's sort of the most overlooked area of health, but actually it's the one out of the three where employers in particular are best placed to help. So as I said, sort of who's using this at the moment, this is increasingly taking apologies. This is increasingly being taken up by the UK's biggest employers. So everyone from the NHS to the UK government, local councils, Green King, largest pub chain, the supermarkets, Tesco, Aldi, Asda, high street chains like Carpetright, the gig employers, Uber and Deliveroo, Capita, I mentioned before, Home Instead, Michelin Butler's another pub chain. We are increasingly seeing across the board that this is in a lot of sectors starting to become, like I said, it did in America, and we are definitely not far from that inflection point now in the UK, where in certain sectors this is becoming a must-have, not a nice-to-have. And if you compete with talent, with the big supermarkets, with the gig guys, with high street, most of these guys are now offering this as an employee benefit. In fact, I recently spoke to someone. I think it was on Monday, and they said they'd actually done the reason they'd reached out to us is they'd done a Google and they found out that 8 of the 10 sort of geographically nearest alternative employers already offered this, and they sort of panicked them into offering this. Now, I don't think we're quite there yet in some sectors, but it's definitely the direction we're heading. In terms of a bit of a buyer's guide, what to look out for, because there's not tons of providers, but there is a few providers out there. I've taken a look at the FCA, the UK's Financial Conduct Authority's advice on this, and I've tried to digest. I can send out the report, but it's a sort of big, massive one of these reports that sort of has too many words in that the government's very fond of producing. And I've tried to digest really into the top 4 bullet points of what to look out for. And I'd say that the first one is that they stress to keep credit and pay separate. So there's no problem in working with employees on things like loans and debt products, but really it shouldn't be the same provider. This is a debt-free product for your workers, and it should not be provided by someone like a bank who does provide debt to your workforce as well. The second thing they stressed is a holistic approach. So we've talked today about on-demand pay, but a lot of apps will bundle on-demand pay with savings features and budgeting tools in a holistic financial wellbeing app, and the FCA stressed that was definitely the route to go down. The third thing that was sort of called out was cross-selling. Some companies and providers who offer this will essentially use the fact they have your employees have downloaded an app to start potentially cross-selling them things and treating them as a captive market. And again, the FCA was fairly clear that that was something to be avoided. And then finally, if there is savings products also bundled within the financial wellbeing app that includes on-demand pay, just making sure your staff savings are safe. And so the gold standard for this is the FSCS guarantee, which basically means that up to £85,000, the government will protect your savings. That's what you get on a high street bank like Barclays or HSBC, and it's just the badge you want to look out for if you're ever offering a sort of savings product to your employees. There's only 3 real big providers in the UK. There's a company I work for, Level. There's a company called Salary Finance, and there's a company called WageStream. We are currently founding an official trade body for the earned wage access on-demand pay space with the FCA and Ernst Young's help. And so we can follow up more information on that. But there is a few cowboys out there, I suppose, is what I'm trying to get at with this slide. And again, I can share the official FCA guidance on this, but it's just something to be aware of. this is the little bit about us, which I try and sneak in just at the end. We are regulated for the enterprise. We are one of the top 3 providers of this in the UK. We are blue chip backed. We are fully regulated, and some of the biggest employers in the UK use us. In fact, because the rollout went so well with Capita, we've actually recently secured funding from Capita. We'd much rather get funding from a a very happy, trusted partner and customer than we would from sort of a venture capital firm. So that's one of our latest pieces of news. Who do we work with in staffing specifically? We work with CXC, work with NCO Europe, who are an outsource organization, and obviously definitely the biggest in the space is Capita, who we work with, and all of the 38,000 UK staff at Capita do have access to the Level platform. I also think staffing as a space will become potentially one of the fastest adopters of this, and I think potentially the staff in the space are more money motivated. They when you're not doing 9 to 5, you sometimes can associate extra work with extra pay, and that link more clearly. Shift filling and retention matter a lot in this space, exactly like they do in sort of the hospitality or retail and supermarket environment, which is why you've seen an explosion of adoption there. And also, as we've underlined, many alternative employers like the gig economy already offer this, and I think that is pressuring or nudging certain people to offer that in that direction as well. Finally, I think it's just worth mentioning, what if you pay weekly? Because what we've talked about a lot today is the transition to monthly pay and some of the problems of that. But just a little side note that one of the sort of weird secondary benefits, which we hadn't actually foreseen when creating the service, is that if you do currently pay weekly, on-demand pay can essentially be used to save quite a lot of money, because what you can do is you can transition to monthly pay. You can get all the benefits as a business, sort of reduced administration costs, reduced payroll costs, and all of that. However, your employees actually can choose their own pay cycle through the app, and so a lot, and the cost of our app is far lower than the savings you'd make through switching to monthly. And so actually, it's not a use case we'd foreseen when we created the technology, and sort of we're working on our product, but it's been an interesting one. And I did just want to throw that in at the end, just in case anyone had sat through all of this and sort of been thinking, but we pay weekly. There's a very different but still a very interesting use case there as well. I think that's everything. I've sort of raced through that. I know it's a fairly novel concept, and I've chucked a lot of information at you. So I'll sort of open the floor to questions now. I think Mel might sort of collect them and ask me them, but obviously I'll share my sort of meeting link and email as well in the chat. And if anyone does think of any questions as they're sort of having a cup of tea or falling asleep later, because I know it's sort of fairly novel, then honestly, please do reach out. And yeah, we're sort of, obviously we'd prefer users, but we are genuinely believers and big fans of this space. And I left a job at Microsoft to come work in this space, and we all are genuinely passionate about this as a technology. And so regardless of what happens, if you've got any questions, we honestly are happy to answer them. And yeah, thanks for listening.
Thanks, Archie. Plenty of food for thought for everybody. And as I said, we're more than happy to send on the recording, obviously, or for a copy of the slides. Just let us know. If you want a direct intro to Archie, then please flag that to us. I've just checked in terms of the chat. If there's any questions, please don't hesitate. I've got one, Archie, just a quick one as you're going through that. I just wondered, is there a minimum number of staff that you would look for to implement Level?
So we've worked with staff with companies who've got sort of about 200 staff, all the way up to sort of the Capitas of the world with sort of tens and tens of thousands. So I think much below a couple of hundred, maybe it wouldn't be worth implementing, and these things can be done more less automated and more sort of off the cuff. But yeah, I'd say a couple of hundred would be the minimum, and then all the way up.
Okay, got it. Thank you. Anybody got any questions?
I can see someone's typing in the chat.
Yes.
How does it integrate with payroll system, and does it integrate with all payroll systems? Yeah, great question. So we are what we call payroll and workforce management system agnostic. So we are integrated with a lot of the guys already. Essentially what we do is we API, we do a technical integration into your workforce management and your payroll guys. And like I said, we can follow up, but we're integrated with most of the big guys already. And what that means is from your workforce management side of things, we can pull hours worked and verified hours and that sort of thing. And then obviously integration with payroll as well. So yeah, we deal with all of that. We've done with most of the big guys already. There is even workarounds if for whatever reason that technical integration isn't possible with sort of simple file transfers. But yeah, absolutely, it's all sort of pre-automated and it's done on a sort of technical level. So there's no extra really any extra real work for your payroll team. But again, if we have a follow-up call, you can sort of share who you're with. I would probably bet we're already integrated for reasons of another partner, and we can sort of just flick the switch, so to speak.
Okay, thanks, Archie. Any other questions? Otherwise, we'll give people 10 minutes back in their day, Archie, which I always think is a benefit.
Yeah, I'm happy to have 10 minutes myself.
Okay. Well, if there isn't any other questions, I'll let you go back, enjoy the rest of your day, and obviously one more day till the weekend. So have a good one, everybody. And thanks again to Archie Heaton. Really enjoyed that. Very insightful. Please let Danielle or myself know if you require any further introduction to Archie, or if you've got any questions, or you would like a copy of the slides, or indeed the recording of the webinar. I think, no, okay. Thank you so much. And yeah, enjoy the rest of your day.
Thanks very much.